Edith, you've raised a really valid point there about the software houses. The fact is they're out there telling you don't need an accountant. We're out there telling people they need this software. And the reason they need the software is so we can be as proactive. And in fact, in the last 10 years, it is probably the best tool that has been created for accountants because we have real-time information. Gone are the days when you get presented 6 months after a backup on floppy disk or whatever.
Or still a bag of receipts.
Or a bag of receipts 6 months after where you've got no idea what's going on. We can work with our clients monthly to ensure they are getting the right information constantly as they go along. And obviously, at Carthy Accountants, we're very, proactive and proud that we offer a pre-year end meeting. So, Adam, give me some of the benefits of a pre-year end meeting.
A pre-year end meeting is meeting up with the client before the year end so that they understand how the figures are going to look, how the accounts will look. So like you said, it's not having the information after the year end has passed. It's having it beforehand and then seeing, well, what scope is there for any changes? We've got tax saving opportunities, corporation tax in the form of asset purchases, capital allowances. We've got, pension contributions. We've got costs that we may not have thought about that can go through the business because there's a plethora of limited company costs that I'm sure business owners aren't aware of that we can utilise. Tax planning being one of the major benefits of having a pre-year end meeting. But beyond that, it's like you say, having the information for the business owner in real time so there aren't any surprises come the year end. We can predict the tax. So that means setting money aside and having no shocks. And also just having that sit-down communication mid-year. It's another touch point for us to understand with our clients where they are in their business journey and what support we can give them aside from the compliance needs of just filing a tax return.
I think absolutely all of that. I think one of the things for me is when I've sat in year-end meetings 6 months after the year-end and a client has said, in hindsight, I'd have bought that piece of machinery. In hindsight, I'd have put that money in my pension. Do you know what we now have? Hindsight. We now are able to tell before the end of the year, right, we do have enough profit to put money in a pension.
There's also the benefit with a pre-year end is if they've got a target set for themselves, do they know where they're at to that target and what do they need to do for that extra push to reach it? So it's a really good position that it's kind of like a precursor to almost like management accounts to know where they're at that time so that they've got time to actually reach their end goals for the year.
Yeah. So essentially what we're saying is the pre-year end meeting is the precursor to management accounts, where actually when people see the benefits of a pre-year end meeting, because they may have been an accountant who does their work 6 months after, they see that benefit, they go, well, actually, wouldn't it be great to see it halfway through the year and then on the next quarter? And then we get back to where I've said there are the big companies that were out there who had an internal finance department that would have monthly management accounts. In fact, some companies will have a weekly reconciliation to know where they are week by week.